So it's 2023 and you want to buy a house, but you're looking at interest rates like these. Today's August 23rd, 2023. Took a screenshot of today's mortgage rates. They aren't so pretty compared to a year ago. So how do you approach the market if you don't want to be a renter anymore and you want to buy a house? Honestly, you really need to look at it from a budget standpoint, how much you're willing to spend every month, and not so much on an interest rate approach. If you know the interest rates are somewhere in this realm and you know how much you're willing to spend, you can then back into what your ultimate budget really is. And it's something that interest rates like this aren't going to last forever. We probably have another, it's really hard to say for really how long this is going to last, but the guess is another year or so of higher interest rates. The fear right now from the Fed is that if they lower interest rates, that real estate is just going to skyrocket again because a lot of people have stepped to the side, which is giving people an opportunity, honestly, coming to the market. There are less buyers in the market, so it does give you more negotiating power with sellers because they do know, and the market has started to budget for interest rates like this. If there are less people coming in, sellers need to be a bit more realistic on really what the value of their home really is. But if you are dealing with interest rates, you gotta realize that if your timeline to stay in that property is only a couple years, interest rates like this will affect you. But if your timeline to stay in that property is beyond 5 years, now could be the right moment. If there's less buyers in the market, you can probably negotiate to a price that makes sense. But you have to consider your timeline and how much you're willing to spend and not be so fixated on the interest rate. That can change, but the location and the property that you then own can't change. So you can eventually bring that interest rate down, and as the property appreciates, you can even get it revalued when you do the refinance and potentially even pull money out. So there are new and different ways to approach it, but you got to look at it much more on a timeline. If you're going to be there more than 5 years, I don't know if this rate matters that much. Get the property you really want and negotiate it to a place that makes sense for you, but you have to be considering that your ultimate budget every month will be affected by numbers like this.